Just give me 1 sec. Yep, we have to live stream on YouTube. In the meantime, we are waiting for everyone to join. So good evening to everyone. For those who are watching us on the YouTube channel as well as on the through the Zoom. So guys, I hope that everyone had a good weekend and you got some rest. Yep, perhaps away from the charts. Not unlikely myself that on the weekends I spent approximately 30 to 35 hours really to prepare all the webinars, analysis for the ones that I sent on the weekly basis to hedge funds and to prop firms. So it takes significant amount of my time on the weekends, but it's something that I really love and I enjoy doing it. So enough said of this one. So let's dive into the disclaimer first. Okay. So to ensure that everyone understands, neither Elevating Forex, myself, Market Mind Mastery, this content, it's only used for general information only and is not intended to provide trading or investment advice or personal recommendations. And thanks for understanding that. Now, for those who join us for first time, allow me to introduce myself. For those who join us every time, and it sounds very boring, guys, I can't help with that. So you have to accept it. And based on who I am in the markets and in the industry, I hold a couple of certificates about technical analyst. And I have experience more than a decade in trading. I specialize in currency correlation and in currency markets, of course. Now it's been a while that I delve into the cryptocurrencies in terms of the educational purpose. I started investing since 2017, actually, on the cryptos. And I'm still using them as investing vehicle. On a daily basis, I deliver market analysis to hedge funds, trading, prop trading firms. I create educational courses for trading and investing, and the rest you can read them from the screen, of course. Now, let's bring the charts and let's start with the Euro US dollar this time. Now, guys, please, any questions you may have, put them on the chat here, and I will be very happy to answer everything for you. Okay, so just allow me 1 second because I can hear myself from my microphones here. Okay, guys, can you still hear me? Is everything okay? And first and foremost, most important, can you see the screen? We are on the Euro US dollar daily chart. Confirm yes. Thank you. So what happened actually last week is that the market took over and create finally a new low lower than this swing low that we pointed at A. Now we have a clear market structure that we want to take advantage of. All right, how do we do that? Well, there are two ways. Either traders who see this chart and they believe that maybe they don't even want to use a stop loss order, maybe they just want to press sell and whatever can happen in the market, that's fine. Other traders who might want to do some more smart, let's say, analysis, they can wait for the price to reach an inside resistance as pointed on the chart. You can write it. It's just above the 1.07, actually, this low here. So that's a high probability that if the market managed to climb up to here, it can experience some decline. Okay. So as per for the trading activity last week, I entered short into some trades to the short side here, and I got a good result. But also I entered long at this support here, and of course I got a losing trade, which is very normal. And especially for me, that I have about, let's say, anywhere between 45 to 55 win ratio. I read more losing trades on my log than winning trades. So for me, it's more normal to say my losing trades because they are more than my winning trade due to the reward to risk ratio IA. For this one here, it was 3.5 reward to risk. And for this one here, it was -1. Okay, so it always weight its average a little bit. So that's the plan for next week on the Euro US dollar. Primarily, I will be waiting for a sniper entry around this resistance. If the price managed to come here and I find the entry on the lower time frame, like on the 4-hour chart, perhaps some order blocks that we already created, let's say at this point, not very robust and solid order block, but it's an exchange of orders actually that took place here based on these candles, and we can use them to initiate some short position. Or if the market will move to the upside, ladies and gentlemen, the price moves above and beyond this high, then it's gonna likely start filling up this gap at this point. So this will become the relevant order block to look for short positions. Okay. Daniel asks, what's my thoughts about gold and oil price in the first few minutes of opening market tonight? Okay, that's a tricky question because let's face it, usually the markets, they are, especially these commodities, they're gonna gap due to the geopolitical events they are going around between Iraq now and Israel and what happened at that area there. So of course we don't like when these uncertainties arise, but talking exclusively about the market, yes, we're going to observe the gaps. And some other people asked me, how do I see the markets like on the cryptos and the shares if you guys are investing? I believe that this time we're going to see the retracements to come in a faster pace. Okay, and the deeper the market they're going to go, the faster we're going to be able to invest, the faster we're going to be able to buy and hold, because then of course they're going to bounce to the upside. But when it comes to trading leverage like this one here, we want to be precise with our entries so we can use according our stop losses. Okay, and by the way, guys, at this point, I was thinking that if you are interested, of course, I will speak with the team at Elevating Forex, and I would like to, perhaps we can do it in forms of a webinar, or maybe somehow we're going to find a way to educate you a little bit about the orders, how when you put your stop loss, what it means for the broker and how the order perceived and all this stuff, okay? Because I see many people, especially when I coach them, and people, you may think, okay, I put my take profit here, but for you it's a take profit, but for the market, it means something else. And once traders unlock this information and understand how these orders flow between your account and and to the broker, then you're going to have a better understanding of how to read the market. And I believe that's a key point. And why I can educate you in that, because I used to work for many years in the dealing rooms of some brokers, and I know exactly how things work from the other side. Okay, that's the only reason. It's not written in any book. You're not going to find it anywhere. It just came with my experience. Next one, Great British Pound, US dollar. If we watch the daily chart, again, we see that this long-term sideways move, it came to an end, and finally the price broke below this support and moved lower. For the official analysis this week, I used this channel, the downward channel, because it can put the price upon this point here, and we see massive bearish candles that they lead the market right now. And definitely we have some areas to work, like this one here. This is a solid, a strong exchange between the buyers and the sellers at that particular price level around 1.25500. And if the price will come to this point, we're going to drill down on the 4 hour, 1 hour, 15-minute time frame, maybe time frames lower, to see if the price will create some lower highs and lower lows of some bearish engulfing candles occur. Then it's going to be a high probability trade setup to take. So I'm very bearish on the pound this week, especially also because of their fundamentals. And yeah, if we can combine this setup with some overall weakness on the pound, that will gives us a better perhaps reward to risk, and also a faster moving trade. Next one, US dollar JPY. What did I put here? Too many indicators, right? Yeah, but that's what for the analysis we need it. So we spoke about this all-time high. That's the 4-hour chart, and it's easier to read the market. And I remember during the webinar last week, I explained, I think the price was somewhere there, and I explained that, hey, the price had resistance. If after multiple attempts to break to the downside, it was unable to do that, so then most likely we're going to see a robust break to the upside. And after the price retraced 100% of this move, that it created an inner lower low, we were expecting the break to the upside. Now, what's the issue behind the breakout? The issue is that if we try to take the breakout, and even if we take the entry very correct and accurate, but if it's a false break on the first attempt and the price declines somehow here, where our stop loss will be placed in order to ensure that we can survive the trade. That's the only minor thing with the breakouts, because the market, it's not in a synchronized, and it doesn't move in a solid higher highs and higher lows. If an upside breakout is expected, then we don't know where the stop loss is better to be placed. Therefore, we can let the market on the breakout, and we can wait on the sidelines for the retracement to go long. At this point, the market created this bullish pennant pattern on the 4-hour chart. If it's going to decline, it's going to come to visit around the 152 round number, then we're going to definitely look to go long here. Okay. After charts ask, after the breakout, must be trade back to the equilibrium or premium. Sorry, yes, absolutely, Charles. Usually the market behaves like this. Usually after the breakout, the market retraced backwards, and then it continued moved upwards. It tested the broken resistance and it acted as support. But there are times that the market doesn't move backwards and it just continue rallies. Okay, that's the reality. Next one, guys, New Zealand US dollar. The price on the daily chart created again a close under this low here. We are still bearish on this one. We do expect the market to continue moving lower with these lower highs and lower lows. So we are still bearish on this one as well. An area that can be good area to look for short positions, it's this one here, around 0.6. And if the price move upward, definitely we will be very interested to go short there. Okay, but if the price surpass these highs and close above it, then it's going to enter most likely into this order block because it wants to fill up this gap above. Any questions so far? USD Canadian dollar, finally the price after ages broke this monthly high and moved higher. It created this impulsive and strong, robust move to the upside. So now we are waiting for a retracement to occur, perhaps around this upward trend line or at this monthly high. It can act as a support and the price can move upwards. Rufia said, you the best. Oh, thank you. You guys are the best. And I very, very much have a lot of respect to every single one of you guys because you are here, you are dedicated, you want to learn, and you appreciate the valuable content here at Elevating Forex we bring out for you. And that's credit everything back to you. Okay. Next one, USD Swissy. Again, based on the CPI event last week, the market favored the US dollar. On the 4-hour time frame, there is an ascending triangle. We can see it here. So if the price moves to the upside, there are about 80 pips to be made until this high here. But if the price, it will start fluctuating a little bit and it's going to decline, we can go to the lower time frames to look for some trades, perhaps around this bullish engulfing order block, or perhaps to go short and fill up this gap here, at least at some extent. Okay, so again, the US dollar on the rally. Next one, Great British Pound and the JPY. This is a daily chart. The market bounced from this support here, so it's not in an uptrend, this one currently, because just moves sideways. It's a bit, especially on the 4-hour chart, it's very confused. What I like though on the Great British Pound JPY, guys, is the fact that the price bounced from this spring. Last session we explained that this spring, based on the Wyckoff's methodology, it was the beginning of this move to the upside. So the market respected this 190 level and moved upward. So this gap here, maybe it's going to be filled, maybe not. But again, the market, it's not in a downtrend. The market, it's not in an uptrend based on this time frame. So we don't really know what's going to happen here. So if we're going to initiate some positions, we have to be a little bit to initiate them with cautiousness. Okay, again, if our traders and if we find some intraday opportunity, momentum trading, of course, on from Monday onwards, definitely it's because of the hourly and 2 hours time frame analysis, and not primarily based on the analysis we do right now here. Okay. Next one, the Euro JPY. I mean, we consider both analysis. It's just when we get into the market for that 10, 15 pips to go fast to the TP1, we must ensure that we are using the current market momentum. Okay, that's what I mean, because if you're going to try, for example, on the Euro JPY to apply momentum during the London trading session, and you're going to enter here with an entry here long with a stop loss there, let's say 20 pips stop loss on this currency pair with an average true range of 120 pips, then a small shake, it can take you out of the trade. That's why we use the lower time frames to ensure that there are perhaps some swings to hide the stop losses underneath or above, depends on the direction, and also to go with the session's momentum, okay, most of the times. Next one, let's check the US oil. We definitely expect some gaps to be honest, on the oil tonight. Let's see. It's another, let's say, 2.5 hours until the market opens. So let's see what's going to happen as well with the gold. Now, that's the weekly time frame. It's an inside candle on the weekly chart, guys. On the daily time frame, the market makes higher highs and higher lows. I have my plan in place here because the market is trending. I'm using the moving averages to capture the move to the upside. So there is a trend line here. There are the moving averages that I hide them now because it's going to mess the chart a little bit. And there is this support, and there is this bullish engulfing order block. So bullish order block, not engulfing. So I'm waiting for the price to print some reversal around these areas. And if this is going to happen, definitely on the lower time frames, we can use tidy stop losses and to try to go long for 2, 3, 4, 5 reward to risk ratio. Gold, what's going on with the gold and why we see and what does it mean when we see these large bearish engulfing candles at resistance areas? First, we have to say that this is an all-time high now, 2431 area. This bearish engulfing, guys, represents a significant amount of sell orders that overcame the buying orders and the market decline. That's the key point. This is not what you think the sellers enter the market. We are not physically present on a trading pit like we used to be decades ago. This is the sell orders. They accumulated on the platform in the market, and they cause the price to decline. So we have the imbalance between the sell orders and the buy orders. And where this significant exchange of volume occurred, it's at this place here, what we call the order block. Okay, why? Because we can see the green and the black candle next to each other. So this is your key point. Here we know for sure that it was the significant battle between the selling orders and the buying orders. And I guarantee you, if you start using the right words while describing the events in the market, you will solve many trading errors you may have in your trading, like to enter into trades faster, to take trading personally, to get messed up in your head. And my purpose as a private coach and mentor is to ensure that you're going to establish the right framework to read the market, to trade the markets on this long-term and order block and smart money concept setups, and not to get bothered by losing trades. All right. So that's a greater example. Now, what can happen if the market next week it's going to move upwards and it will trade above this 2431? It means that all these sell orders, they got beaten by the buying orders, and the buying orders are by far more significant than the sell orders. Therefore, we confidently we will be looking for buying positions, for long positions. Guys, I try to explain it as simple as I believe it can be in order to pass you the correct message about how the market moves on a daily basis. And this is a very good example. So starting from Monday, these lows here are a solid intraday support, this one here. So if the price breaks below this, on the lower time frames only, we can capture the move between this point A and this S1 weekly low. Okay, because we don't know if it's going to break the support, and therefore we're not going to try to go short on the support, primarily because we don't have a small range to place this stop loss. If you have to enter short from there and you're going to place your stop loss above the swing high, then guess how much the price needs to run in your favor and for how many days to give you some winning 1 or 2 or 3 to 1 ratio. Okay, do you guys understand it? Am I talking to myself? That was a joke, of course. Come on, I'm trying to bring the energy up so it doesn't feel like I talk to myself here. Jack asked, very clear, mate. Thanks, Jack. Is the stream going to be available after it ends to rewatch? Absolutely. On our YouTube channel, guys. Subscribe on the Elevating Forex YouTube channel, and you can be able to rewatch it as many times as you want. Next one, which one to check? The S&P 500. So S&P 500. Theo, what did you draw here? Looks like a zone of unearthed here. So, guys, S&P 500 on the weekly chart, the price created a nice bearish engulfing candle. Okay, so the representation, the breakdown of the weekly chart on the 4-hour, it looks like these lower highs and lower lows. Now, what did I do here? I managed to mark the valid, the solid order blocks that they are extremely relevant and they can give high probability trade setups from next week. So the market currently is sitting at a previous low with this dodgy candle after a strong move to the upside in one way. So we do expect it that the price is going to might move to the upside for at some extent, and if the downtrend will continue, then we have to see the price retrace back, decline afterwards, and move below this previous week's low. So the plan is, yes, to continue looking for low for short positions, but we have to be patient and wait for the price to arrive at an area that most likely the market participants, most of the market participants will be willing to place orders at that area. And that's what this bearish engulfing order block stands for. We identified it at the beginning of the move. It left behind a solid gap area that it might going to be filled. And if the price is going to start rallying, then we might going to find some resistance here and we can short it from there. Okay, that's my plan. Now, it can be traded in two ways. We can go long from this intersection here. It's not something I will do, to be honest, because that's not in my trading style. My trading style is to wait for the price to come at a confluence area with order blocks being present, engulfings primarily, as you understand so far that you know me, I talk only about bullish and bearish engulfing order blocks. Yeah, so that's the plan for the S&P 500. The Nasdaq, it's very choppy, sideways. I'm not interested to do anything with this one. Each bearish candle, it doesn't follow through, so not really keen to do anything with this one. An interesting one is the DAX, the European indices. So on the DAX, the price found support last week, bounced to the upside from these weeklies here, lows, and it came at this order block. It tapped in and then declined. So we do expect for the price, if it's going to break this previous week's low, to move lower. Of course, there is a downward channel that can be drawn because the market respected actually this decline in that sense that the trend line can be drawn, and also the return line really well captured the price. So why not to put it there and have it as a guideline. Okay, so from next week, if some reversals appear here, maybe on the lower time frames, we can find higher highs and higher lows and to go long. For more patient and sniper traders, as I call them, including myself, I'm waiting for the price. If it's going to rally, to come here, go to the 15 minutes, 1 hour chart, and find some entries to go short. Questions here. Tanaka said, I am new here. Do you do live trading? Still learning a lot. Send me a message here at Elevating Forex at support, and I will reply back to you on Telegram about this one, about live trading. But of course, on a daily basis, we send our traders send signals on the group. Okay. Just to clarify, what kind of live trading do you mean and how can I help you? Jerome said Bitcoin did a monthly low. Yes. And we're going to talk about the Bitcoin. Mitcham said, I appreciate the way you guide things. You are very much welcome. Appreciate your presence here on the webinar too. Of course, to everyone. And guys, the Bitcoin, of course, the Bitcoin, let's check it on the weekly chart. It's easier. So what's going on with the Bitcoin? I have two targets on the Bitcoin. The first one is the 60,000 and the other is the 50,000. Why I have this? Where is the 50,000? Somewhere here. Why I don't see it on this? Sorry, the 56,000, not the 50. It's the 60 and the 50, the 56. My mistake. Let's go back on the weekly chart. What is happening with the Bitcoin? It's just the market after this straight move to the upside starting from February is retracing. Okay, don't get panicked. Of course, especially if you are investing in Bitcoin. Look at this move, started from early October last year. It moved to the upside. Only 3 bearish candles. The market didn't even retrace, almost nothing. And it shoots straight upward. So now, after 7 months, actually, we see the first retracement in the market after 7 months. So it's okay. And all these events, they are happening around the world now in the Middle East. They most likely can help the markets, the share markets and the crypto markets to go through their retracement in a faster pace. Okay, so I'm not really worrying about that. But the fact that it made a low on the monthly chart and all this stuff, definitely yes, it reaches the 60,000. So if it's going to move to the upside, there is the first resistance around 67,000, 68,000. But if it's going to keep declining, I see it, of course, to come around this 54 to 52,000, because all this area, it's an unmitigated area. There are gaps here that they haven't been filled, and the market definitely it's going to come to get some gaps here. So only if the price declines and moves under the 60,000 and close under the 60,000, we're going to see the price to decline further. Okay. For now, we are in the middle of this sideways move, and if you're going to try to trade it on the lower time frames, let's say the 4-hour chart, the price has this gap area here, as you guys see. Maybe I need to zoom in a little bit. So this gap area here, and also this gap area there. So, but it needs significant effort to surpass this one, to close above 68,000 and to come and fill up this gap. If not, and the market is going to keep selling off and declining, then definitely we will see some more bearish pressure, and it's healthy for the market. Absolutely. Jerome said, with the halving coming up next week, where a big bull is expected. That's another thing now with the halving of Bitcoin that we definitely expected. Also, maybe that was the reason that they tried to push the market aggressively from 74 to the 60,000 in order to buy it at the lower price eventually with the halving. Now, what I'm saying here is we have to treat it as case by case and scenario by scenario. If we believe that the market from Monday onwards is going to start rallying, and we believe, traders believe that this is the bottom and they start buying, some of them they're going to be right, some of them they're going to be wrong, okay? Because the market might decline further and deep down, take all the liquidation here, all the stop losses that they placed here, they're going to fuel sell stop orders, and then it's going to push to the upside. Because we don't know exactly what's going to happen, that's why we use support, then we use resistance, and we map the market around support and resistance. I repeat, when it's investing, it's a totally different scenario because we don't use stop losses when we invest. We just buy a little bit, little by little, while the market is dipping. And that's what we call, we are averaging the cost of the price. Okay. Next one. Let's check a bit the crosses, or perhaps we can see the calendar. Yep. So from Monday, we are looking forward to retail sales in the US. On Tuesday, some Chinese events that we don't trade the Chinese one, but employment change and unemployment rate in the UK. On also consumer price index in Canada. And on Wednesday, consumer price index in New Zealand as well in the UK. On Thursday, employment and unemployment rate, employment change and unemployment rate in Australia. And I don't know why, but lately the FX Street calendar doesn't give us the consensus. From other calendars, I find out that the market is expecting to have a significant increase in the unemployment rate, and that's 0.2%. For those who don't understand, from 3.7% that was previously, they expected to see an unemployment to 3.9%. It's a huge deviation for unemployment. It's like, how to say it in other ways, let's say 100,000 less jobs registered from the previous month. Okay, so it's a bit of a bad thing for a bit of a bearish thing for the currency. And on Friday, retail sales in the UK. Back to the charts, and it was a bit interesting with the Euro Canadian dollar and Euro Australian dollar last week on the daily chart. For me, this is a mess. In just one word, the Euro Australian dollars, the price from this support, it put this bullish engulfing, then an inside bearish candle. Now it's trying to take over. The market is trendless. I'm not interested to trade it. The Euro Canadian dollar, it was a little bit more quiet, like more tight. At this resistance here, again, the price printed a bearish candle, the market declined. We have the support to work. Now, again, I don't do anything with this one. The Euro New Zealand, both of them, they were weak last week. So which one is going to overcome which one, who knows? The only technical good thing, it was this bullish engulfing order block. For patient traders, that worked really well. It was right at a broken swing high, and the market took advantage and found some support here, of course. And the Great British Pound Australian dollar, the market created, it took advantage of the weakness of the sterling, lower highs, lower lows. So we eventually now waiting to see continuation to the downside. Okay. Great British Pound, Canadian dollar, guys, very messy. I'm not looking to touch it on the 4-hour chart. If the daily is messy, imagine how the 4-hour chart is going to look like. And the pound New Zealand overall makes this higher high and higher low. And we have this support here. Let's see what's going to happen. Both countries, they are expecting to experience weakness on their CPI numbers, and that's not very good or favorable for the currency. Questions? Jesus Lichen asks how I can join the VIP group for free. Please send us a message at support, and Gios is the expert to answer that question. Ask me anything about the market, about perhaps if I have a crystal ball here and I can tell you which direction they're going to move now. Joking. Jerome asks, a lot of signal channels were targeting pound JPY. Can we have a look at that? We already explained the pound JPY. I believe the reason that they are looking intensively to the pound JPY, it's because if they are looking on the 4-hour chart, they see this price inefficiency created at this point here. Also, there is a solid support founded around 190 Japanese yen. That's all. What's your idea on DAX, bearish or bullish? It's primarily bullish now. On the, sorry, not on the DAX, on the dollar index, primarily bullish, because the I think I have here the dollar index. Here is the dollar index, because the market makes higher highs and higher lows, and the one resistance is here, but ultimately the market it's going to rally up there. That's what I believe. So price makes this high. Yeah, it left behind some gaps. We expect the price to decline and fill up some of the gaps. But again, if this is going to be a strong move to the upside, a strong upward move, we're going to end up seeing the market moving higher and at least retesting these areas here, which means we can take advantage of the euro, US dollar, pound, US dollar to the downside, of course. And yeah, guys, I think that's all from us here at Elevating Forex. I don't see any other questions. I hope we continuously adding value and you find value in your trading. For those who need some personal guidance, some mentorship, I provide mentorship on a daily basis. And if you are interested, for only because you are here at Elevating Forex, I have a package for 8 sessions. I'm not going to talk in this webinar a lot about this one. I will explain you on next one. But for 8 sessions, instead of $7.99 US, it's going to be only $4.99 US. Okay, and that's the total price for 8 sessions. Yes, not per session, not per 4 sessions or 3 sessions. It's $4.99 US for 8 sessions, and each session is for 1 hour, and that's one-on-one private mentorship with me. Even if you don't know anything about the markets, or if you know many things about the markets, definitely it's for everyone, and I can help you. Some traders need help on the mindset. Some traders need help to manage their emotions and trade. Some traders need help to learn trading, and some traders need help to execute trading. Okay. And yep, again, it was a privilege and honor to host this webinar for you. From myself and all the Elevating Forex here, we wish you to have a lovely evening, guys, and let's smash the markets from tomorrow onwards. And yep, I will see you all again next Sunday at the same time. Thank you very much. Good night, everyone.